You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 8th. I'd like to share some thoughts about finance daily. Today, we are taking a deep dive into how oil-driven inflation expectations are, triggering some really massive financial policy reactions across Asia.
Right. It's a very delicate, highly coordinated situation right now.
Yeah, exactly. And we'll be looking closely at two major players today. That's the Bank of Korea, or BOK, their central bank, and the Ministry of Economy and Finance, which we'll just call MOF. And before we jump in, just keep in mind that the Korean won pairs very closely with the US dollar. That context is super important.
It is, yeah, because, well, the market is currently bracing for a BOK rate hike, likely by July or August. And the blueprint they're using for this is actually really fascinating.
Oh, right. I wanted to bring this up. It's essentially a resurrected 2022 blog post by their Monetary Policy Director General, Hong Kyung-sik. I mean, it's like fighting a rage with fire by executing a 4-year-old fire safety manual step by step. They aren't improvising at all.
No, not at all. They are explicitly signaling their moves. And to understand why, you have to look at what they're actually fighting. They aren't reacting to like spot inflation or today's oil prices.
Right.
They are reacting to rising inflation expectations. So people anticipating that everyday things will get more expensive.
Which they absolutely are. I mean, the 1-year expectation just hit 2.9%, and the 5-year hit 2.6%.
Exactly. So if you expect your rent to spike, you demand a raise. Your employer then hikes prices to cover your new salary, and suddenly inflation becomes a self-fulfilling prophecy.
Yeah, a total wage price spiral.
Right. And that is the core argument of that 2022 framework.
Right.
By taking preemptive action, the BOK avoids having to shock the system later. So we really need to watch the May 28 BOK meeting. It's the big catalyst.
Right. But this whole domestic inflation fight doesn't happen in a vacuum.
Definitely not.
Because the won moves so closely with the Japanese yen, the BOK's headache is directly tied to what's happening next door in Tokyo.
Yeah, and Japan is in the middle of a massive currency defense. They just deployed roughly 5 trillion yen to defend the 160 yen per dollar line. And because of that tension, U.S. Treasury Secretary Scott Bessent is actually visiting Tokyo from May 11 to 13 to meet with BOJ Governor Ueda Kazuo.
Okay, wait. Here is where I want to push back a bit on the mechanics. If Japan is defending the yen, they have to buy it, right?
Well,
Which means selling dollars. And to get those dollars, they presumably liquidate U.S. treasuries. If I'm a global hedge fund and I see Japan about to dump massive amounts of treasuries, don't I just front-run that trade? Wouldn't that send global treasury yields spiking?
yes, and you just hit on exactly why Bessent is rushing to Tokyo. That is a massive, highly disruptive scenario.
Well,
Because if U.S. yields spike, that immediately forces Korean interest rates upward just to maintain the yield spread.
oh, wow.
Yeah, if they don't match it, capital just flees Seoul for higher returns in the U.S. So that May 28 BOK meeting is practically held hostage by whatever Bessent and Ueda hammer out.
That makes a lot of sense. So while monetary policy is trying to plug these fiat currency leaks, fiscal policy is simultaneously locking down digital assets.
Yes, it's a very clear two-pronged approach.
Because MOE just officially confirmed that a 22% tax on crypto income over 2.5 million won, which is about $1,750, starts in January 2027. And, just to map out the political clash impartially here, the People Power Party has actually filed a bill to repeal this tax.
They have, but MOEF is holding firm. Their rationale is based on tax equity. They're relying on a 2020 legal framework to argue that if traditional investments are taxed, crypto should be too.
Right, but the real question is enforcement. How does a Korean ministry tax a wallet sitting offshore?
Well, that is where the Crypto Asset Reporting Framework, or CRRF, kicks in. It basically creates an automated global dragnet.
Wait, really? How does that physically work for foreign exchanges?
It mandates cross-border tracking and automatic data exchange. So for foreign financial firms, this finally removes regulatory ambiguity, but it means they have to build really expensive compliance infrastructure to report Korean residents' transactions directly back to MOF.
So they are completely tightening the net on all sides.
They are. Which leaves you with an interesting final thought to chew on. As global tax frameworks close in on offshore crypto, how will that reshape capital flight strategies during these regional fiat currency wars?
That's today's AI Prism Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN Eye for Eye award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.